What's up traders, it's your boy PrecisionFX, and today I just want to show you the trade I took, which is shorts on the Dow Jones. Most of you guys know it as US30. This is going to be a simple breakdown for those who actually understand smart money concepts, but for those who don't, you are free to ask any questions in the comments, right? So when you look at the overall structure, right, you can definitely see that from there the market was actually going to the upside, then change the structure going to the downside, as you can see here, right? So since we have an idea that the market has been going lower for the longest, even though it shows a little bit of change right here going to the upside, we know that the overall market structure was going to the downside. Yes, many people have their own interpretation of the market, but this is how I interpret it, right? And this is how my students actually interpret the market with me, right? So one of the things that I can tell you is that if you know SMC, you know very well that there are many traps in the market. Just for an example, right? If you are someone who's actually analyzing the market and you see a structure like this right here, you can definitely say that right here we had our breaker structure out there and we are retracing into a fair value gap, which is next to an order block right there. This is our order block right there, and this is our fair value gap up here. So most of you guys are gonna say that yes, the market once it comes here is gonna pump up, targeting the previous high, which is around right here. But I interpret the market looking at the overall long term, even though I'm entering positions in the market. Let's just say you're a trader and you saw this kind of a setup and you're gonna saying I'm gonna enter the equilibrium of this fair value gap targeting the high right here. First things first, you're not wrong, you just don't have the overall idea of the movement, right? Because if you look at things closely, you can definitely see that if you were here, if the market was around here, you would say yes, I did catch a sniper entry right there and I'm in profits targeting that high. Then you hold and eventually the market shows you flames, right? That's normal, that's something that happens in the market. But having the overall idea of the movement is something that's going to be beneficial in the long run, right? So now let me show you how I actually caught this trade, right? I looked at this as a trap, that the market is actually trapping buyers in to take them out so that actually takes sells, right? So if you look closely, you can definitely see that the market around this area, it formed something, right? Right here, there was a low that was formed, in which I actually interpreted that the market is actually gonna fill a fair value gap since it did a market structure shift around this area, as you can see right there. It's not really complicated. So with our fair value gap, right, since the market took structure here, I indicated that, well, the market showed me that its fair value gap, it's lying around here, right? The fair value gap is lying around there and it's next to my order block, which is around there, right? Everyone has their own ways of interpreting things. This is how I interpret my things, right? So I entered those trades around the equilibrium of the fair value gap, right? That's basically the 50% of the fair value gap, as you can see right there, it's in the middle. That's my 50% of the fair value gap. So that's exactly where I entered my trades, right? Yes, at many times you might enter trades and the market mitigates deeper, right, as is indicated right here. So as you can see, so there are many times in which the market can actually, you know, liquidate deeper from your entry, which is why it is crucial not to add many positions at your entry point, right? So my entry point was around there and it mitigated deeper to my order block, right? So first things first, I knew that the market built liquidity which had to be taken right here. And if you're not familiar with an inducement, if you're looking for buys in this situation, you're gonna look at that as your inducement, right? But I looked at it as my target point basically, right? And this was my other target point. This was the last target point actually. So if you jump lower on lower time frame, you can definitely see that that fair value gap is actually there, right? You can see that there is a gap which had to be filled. But I was looking at this on the 30-minute time frame, right? and this is where I place my positions. And yeah, I actually placed my stop loss just around that height right there. You know, the spreads and everything, including the markets, right? Let's play it through and see exactly how it went. As you can see, straight up from there, the market actually dumped to the downside, taking our first take profit. Now, here's something I want to show you guys, right? In order for you to actually learn how to add positions as the market is going to the downside, right? So what you're going to be looking for is a break of a previous low and a retracement into your fair value gap or your imbalance, right? So let me just do this to actually show you how you actually enter more positions. Obviously, you're going to be looking at this at a lower time frame, right? So you can see definitely that the market actually displaced through this low right here, taking it out, indicating that it's definitely gonna go low, right? I had other positions here. I saw this fair value gap around here and I was expecting that the market must come here. I add more positions, then goes to the downside, right? And that's exactly what I did, and look at what happened. So the market actually filled my positions there, and as it was going down again, you can definitely see that a low was taken out. There was another fair value gap right here, right? So in situations of whereby I see big fair value gaps like this, I like to go lower to actually catch the move itself, like the wick of a candle. So you can see that here is our fair value gap just up there, right? So obviously you would add more positions there as it's going down. So what this prevents, basically it prevents reversals like this, right? You would think, let me just add more positions, but as it's going down, you can definitely see that there was a retracement. If you added more positions around here, you can definitely say you're cooked, because the market will take you out and those other positions that are up there, right, you'll hit margin call. But yeah, let's see if it respected that area. You can definitely see that the market actually respected that area. Let's jump onto the 15-minute time frame, 30-minute time frame, exactly as you can see, which is one of the reasons I said I wanted to catch that wick exactly, because I was looking at the 30-minute time frame. You can definitely see that everything, all the positions from there, all of them are secured. All I have to do now is wait for the market to do the same exact thing, if it's gonna do that, and actually take my profits right here at that resting low, straight up like that. As you can see, the market actually took our TP right there, and with all our entries from there, right, as you can see. So guys, that's basically how I turned 4,000 rands into 40 something thousand rands, around 50,000 rands. That was my profit overall. So remember, one thing about the markets is, as much as you can learn, as much as you can invest, and as much as you can be confident and emotionally fit, there will always be some losses, right? So you have to remember to expect those losses in the markets. And drop below comments if you think I should drop Saturdays or just any time that I want, right?